Welcome to the 10th anniversary of REIMAGINE 2021. Presented by Mousebelt. Coming up next.
Hello, everyone. Welcome back to REIMAGINE 2021 version 10. So this is actually our 10th edition anniversary. We've been doing this for a whole year now, bringing you monthly virtual conferences, bringing you the latest innovation and really finding founders and leaders out there who are breaking the bounds of what's being built next in this industry. I'm your host, Roshan Mirajkar from the Mousebelt team. And I'm very excited to bring you here a returning guest at REIMAGINE. So with me here today, I have Alex Mashinsky, who's the CEO and founder at Celsius Network. Alex, welcome back to the show. Really glad to have you here today. And I think a lot of people know a lot of things about you, but you continue to push the bounds and do new things. So, just to start off with, how is the last mini bear market and time of liquidations? How's that process been going for you and your team?
Hey, Roshan, great to be back. And yeah, thanks for continuing to create content and educate people. I mean, obviously, without that, we wouldn't be growing the community. So we had a phenomenal year. Last year, January, we were at about 550 million in assets. Before this crash, we were at 22 billion. And after the crash, we were over 15 billion, right? So we're definitely continuing to grow very, very rapidly. Almost 1 million users worldwide, 170 countries. And, we've done a phenomenal job for our community, distributed over $700 million worth of interest to all of these customers. We've now grown to 42 different assets. So we earn yield on 13 different stable coins, 3 different gold-based denominated or gold tokenized gold assets, and 14 different blockchains. So that's more than anyone else, right? There isn't anyone in crypto that can recite these numbers. And again, the most important thing that we've done a great job for the community. We announced publicly several times that we had no liquidations or counterparty problems with our institutional investors, zero liquidation, thousands of margin calls, but no liquidations. And while it's unfortunate to hear that just on Binance, I think 1.5 million customers got liquidated, over $11 billion worth of value lost. At Celsius, in total, we had 102 retail margin calls on which the customer did not respond, and we had to do a partial liquidation. So that's less than $200,000 out of a book of 15 billion. So I don't think there's a bank in the world that can give you numbers like that either, right? I mean, today, most banks have a credit card average loss of 4 to 6% of their portfolio. And we're talking about a fraction of 1%. At Celsius.
Yeah, definitely. The variety that you guys offer your customers and your stakeholders, you guys have been doing it before kind of DeFi even existed. So I think that's a great point. And you guys are kind of like pioneers in this industry, right? So what I find interesting is a lot of people maybe don't understand the different options out there for yield. Everyone thinks of yield the same. Can you kind of break down like the Celsius token and kind of your corporate structure so that people can understand why you guys are different?
Sure. So, like you said, we invented the whole category, right? So before Compound paid you in comp or Aave paid you in their own token, Celsius was the first one to offer yield. No one has ever offered yield. And then offer you two options. One, get paid in kind, Bitcoin on Bitcoin or Ethereum on Ethereum. And or you could be earning more with the Cell token, right? That was a Celsius innovation. Now almost everybody's offering that. Every pool gives you sushi swap, sushi coins or pancake coins or whatever. But really, we invented this whole idea of enabling yield and then creating an incentive for people to earn. And in 2020, the Cell token was the best performing, according to Masari, the best performing asset in all of crypto was Cell token. So we created tremendous value for our community. And it's not just that we benefited, but also our community, all of our users benefited from hodling with Celsius. And I'm super excited that that we managed to deliver most of that value to our community. So the main difference between Celsius, which is a CeFi company or centralized finance, which means that we have one leg in traditional finance and one leg in DeFi, and people who are pure DeFi, is that DeFi, while it's great for some people, if you're really a maven and you're a geek and you know you can code in your sleep, it still only runs on one or two blockchains, right? So you either run on Ethereum or you're running on Solana or you're running on something else, but you don't have the breadth that Celsius can offer. And the average yield, like right now, the average yield on DeFi is 2 to 3%, and Celsius continues to pay 6 to 15% on the same assets, right? So how can Celsius pay 2, 3, 4 times more compared to DeFi, or 50 times more compared to your bank, right? That's really the big question. And the answer is that what the bank pays you is not fair value. It's not what it costs to borrow money. You want to know what the real cost for $1? Take USDC, put it on a platform and see what people are willing to pay you to borrow it. Right now, you can earn 8.8% on USDC all day long, right? That rate, you get paid every Monday. It compounds. And if you take the same dollar, put it in a bank, you'll earn 0.5%, right? So it's 15 times more than your average bank. So that's really the difference between kind of traditional finance and DeFi and what Celsius can do. We have 6 sources of yield. So we lend to institutions, right? There are counterparties that pay us interest for the fact that we aggregated Bitcoin from almost 1 million users. We collect that interest. We give most of that back to the community. So the equivalent to that on Wall Street is called SEC lending or securities lending. And Robinhood does it, and Charles Schwab does it, and Fidelity does it. They just don't pay you any of that, right? When they lend your Tesla stock or your Facebook stock, they earn yield on that. They just don't share it with their customers. Celsius decided to share most of that with their customers, and that's how yield on crypto was invented, right? We created that category from scratch. We also lend to exchanges. So that 15 billion that we have came mostly off exchanges. Now exchanges have to pay to have liquidity. They have to pay to be able to do market making and so on. And who are they paying? The community, right? Which is a great outcome. We also do DeFi. So we are the largest user of DeFi. We are probably the largest user of Aave or Maker or Compound and so on, because we have the most deployed on these platforms. And the beauty of Celsius is that one day we're a lender and the next day we're a borrower. So we're actually creating the yield that you, as a user of Maker, are earning on the other side. Celsius is the one paying that interest because it's cheaper for us to borrow on Maker sometimes than it is from some other counterparty. So we also lend retail to our retail users. If you need a margin loan in dollars against your Bitcoin, that helps the price of Bitcoin. Why? You don't have to sell it. You can take a loan, pay off your credit card, pay your student loan, or invest in a different asset. And that's a beautiful thing for people who also defer their taxes, right? Because you don't have to pay tax on what you sold. And the last piece is mining. We invested hundreds of millions of dollars in the mining business, mostly in North America, in renewable resources. And for us, mining is a source of yield, source of Bitcoin. I have to pay more than 6,000 Bitcoins every year to my community. If I can get it from a Bitcoin factory, then I'm going to build a Bitcoin factory and get it from there instead of getting it from an institution on an exchange.
Yeah, I think that's really interesting. And in my mind, I'm kind of, you guys are almost kind of building this like crypto ETF internally because you have so much diversification. So I think it's really exciting. And I think, going back to the concept of DeFi, everyone always talks about TVL, total value locked, and this overbearing metric. And you all have had a higher TVL than like all of the top DeFi projects, for a very long time. So can you tell me, like, how do you see the future of DeFi converging for retail users with CeFi? Like, do you see people learning about DeFi first, maybe through CeFi, or do you think that there'll always be a gap of education for retail?
Right. So first, what matters is not the TVL, the total value locked, but rather the ratio between the TVL and how much is lent out. Like right now, the problem that most DeFi platforms have is that the TVL is still high, but the amount of loans being issued is very, very low. That's why you're only making 2 or 3% on your DAI, because no one really needs it. Celsius is probably the largest borrower of DAI right now on all these platforms. So at Celsius, because we have 6 different sources of yield, we don't have to rely just on DeFi or rely on a GBTC arbitrage like some of our competitors do, right? We go where the yield is highest, and we move assets between all the different players to make sure that we maximize the yield. Now, we have a much higher barrier than DeFi. So it's much harder for Celsius to have 15 billion than it is for Compound, for example. The reason is that Compound does not have KYC, does not have AML. Anyone can go to Compound, open an account, download a wallet, connect, and transact, right? So at Celsius, we have very strict policies. We have to make sure that no bad apple comes and taints the whole Celsius network. And we've done an excellent job with that over the last 4 years. So I think for users, you really have to choose. Like I said before, if you audited every line of code of every project in DeFi, and you know exactly when the landmines are and what to use and what not to use, and you know how to farm and how to hop from one side to another, and you know exactly when to switch and how to avoid gas fees and all kind of other stuff, even then you will not earn 8.8% on your stablecoin. Even if you put leverage on it, you will not earn it unless you're taking excessive risk. I mean, the beauty at Celsius is that you're not taking risk. There's no leverage at Celsius. It's not like we're levering 4-to-1, and that's how we're delivering 8.8%. So we are delivering the highest yield with less risk, not more risk, because we only approved the 9 platforms on DeFi. There's over 200 or 300 platforms, over 200 or 300 pools, and most of those are not approved on Celsius. No Celsius employee is allowed to put assets, community assets, on those platforms. Do you know which are those 9? No one does, right? So that's again tremendous amount of work from our security team, from our risk team, and others to identify and figure out what is safe and what is not safe. And we stayed out of trouble. When Mark Cuban got bailed out or blown out, Celsius did not have $1 or 1 coin on any of those pools, right? And we continuously update our community almost every week. We tell them, hey, this hack just happened. We had nothing there, nothing there, nothing there, right? So these are public statements. It's not like we're not telling you where we're getting hurt or whatever. So we also launched proof of community. So we to supplement the fact that people are saying, well, I can see everything on DeFi, I cannot see it on CeFi. Well, now you can. You can see everything on CeFi and understand even better if you're getting paid pro rata. Are you getting paid exactly what is owed to you, which is not really possible on almost any other platform. So all those things together, I think, are raising the bar. But altogether, it's CeFi plus DeFi, right? For for a lot of projects, for a lot of programmatic yield creation, you might need DeFi and you might want to use a smart contract. But if you want to just earn yield and get paid every week and not worry about it, not having to change anything or move everything, you just transfer your coins and the platform earns yield every Monday. You get a notification of how much you earned. You don't have to do anything, right? You don't have to check it. You don't have to water it. You don't have to farm it. So that's really the beauty of Celsius.
Yeah, that's great. I mean, I think it's a great gateway into crypto, Celsius, and all these other people, you know, in traditional finance. They're wondering, what are people talking about farming and so on. It gets quite complicated. But I think I think it's great that you're putting so much emphasis on transparency and keeping the same values of like how crypto started. So tell me a little bit more about, I know recently you guys did a thing with Horizon Labs. I think it's called ZK Audit. So first privacy preserving audit blockchain. So tell me about why even do this, and what do you see with the future of things like audits and transparency for the industry?
Sure. So for 700 years of banking, we relied on, I think, either the Venetians or the who invented double entry system? I think it was the Venetians, right? So the same system is still being used, right? When in 2008, when Lehman Brothers went bankrupt in, I think it was June of 2008, sorry. 3 months earlier, their auditor published a report saying that they're great. Nothing is wrong with Lehman Brothers. Everything is wonderful, right? And that they gave them, I think, a AAA credit or AA credit, right? And they were bankrupt 3 months later. So we cannot rely on double entry accounting anymore, right? It's just not, it's too slow. By the time you get that data, it's completely irrelevant. And that's part of why we have to bail out our banking system every 10 or 15 years, right? Look at it, right? I mean, who pays for that bailout? We, the people. It's not the government. It's not the central bank. We're always printing more money for that, which means it's coming out of our pocket in the form of debasement. So we decided to do something about it and create what we call a triple entry system. And we're using ZK rollups or zero knowledge proofs to verify what is hard to verify that we have the assets, to verify that these assets were deployed, verify that yield was created, that payments were made by a counterparty, by an institution, verify that you got the percentage of the, if you are 1% of the pool, of the Bitcoin pool, did you get 1% of the yield, right? And you can prove all of that without actually revealing all of the counterparties, all the institutions and everybody's transactions and so on. And that's really the innovation. So we are taking all the blockchain data on Bitcoin, on the Bitcoin network that we create, right? Because we have over 110,000 Bitcoins moving around, being lent out and creating yield and all that stuff. We're taking all those transactions, using a Horizon sidechain to basically encapsulate that, create proofs, and then give you what's called a reward explorer and other tools to verify that everything Celsius tells you on the double entry system is also verified on the blockchain. And that's what this triple entry is all about. No one has ever done this before, right? It's elevating the standards dramatically. And we think that anyone who wants to come to crypto and take old bad habits from Wall Street and bring them over here, we're going to force them to adhere to a whole new set of standards. So we don't need a bailout. We don't need a handout. We don't need to basically be regulated or have the same type of enforcement that's happening on Wall Street, because the only way they can, basically dictate the rules is by basically putting 60,000 pages of regulation, right, Sarbanes-Oxley, on everybody, just because there's one bad apple. So here you can find out exactly who is the bad apple by just doing this triple entry and checking the records every minute, every day.
Yeah, that's awesome to hear. And, that was kind of the main innovation, looking back at Bitcoin too, right? Like preventing double spend. So I think you guys are trying to enable that for for this next wave of maturity. And you know, one thing that I was going to ask you is, you know, many people are concerned about the concept of leverage. So I think people have this misunderstanding of what leverage means in crypto with like collateralized loans, it being over collateralized, and the traditional finance system where not a lot of things, the collateral is not on chain, so to speak, right? You don't pay, you go to court. So can you talk a little bit more about in the coming years or even in the next year, when do you think we'll get over this point of where like people will no longer take loans from traditional banks?
So yeah, so obviously there's a lot of confusion, and I think a lot of the FUD or fear, uncertainty, and doubt is created by people who are trying to bring down the crypto community, right? And say, oh, it's bad, it's not green, Bitcoin is horrible, you know, these guys are over leveraged. But they themselves are calling the cattle black. I mean, they're the ones who have 20 times leverage. So let's go through the numbers, right? Very simple. A bank that is using fractional reserve, all banks use that, right? On average has $1 for every $20 that they lent out. So their book ratio, their ratio between assets and loans is 20 to 1, right? The leverage is 20 to 1. Because Celsius or DeFi is not, no CeFi or DeFi company has a banking license. We're not allowed to use fractional reserve. We're not allowed to do all these crazy leveraging that banks do. And that's why there is no platform. Like Aave at best gives you 75 cents on the dollar, meaning there is 0.75% to 1, 0.75 to 1, or 3/4 to 1, versus 20 to 1, right? So it's not even an order of magnitude better. It's almost 2 orders of magnitude better than the banks, right? So when you're thinking that crypto is not safe, you have to really compare it to what the alternative is trillions of dollars of outstanding debt that has nothing behind it, right? The emperor has no clothes here, right? And everybody's relying on the fact that the Fed or the ECB is going to bail them out if something bad really happens. Look, crypto went through 2 stress tests, 2 very, very extreme drawdowns, right? One on May of 2021 and one on March of 2020 when COVID started. And both of those were over 50% drawdowns in which the Fed didn't interfere. I didn't hear, you know, the Fed chairman or Janet Yellen jump up and say, okay, we have to save DeFi, please, you know, let's go to the Senate and ask for $10 trillion to bail out the DeFi or CeFi or whatever, right? So the community, because we don't have leverage, managed to have, again, Celsius had 0 counterparty liquidations. You know, we had margin calls. We issued thousands of margin calls, but no one defaulted, right? And despite a 50+% drawdown. So it's very important to understand that we withstood the stress test. And just a few years ago, right, 3 years ago, 10 years after the 2008 collapse, banks, tier 1 banks, still did not pass the Fed's stress test or the FDIC stress test. That's how bad that leverage is. So when you hear these things, you have to really ask yourself, okay, who's saying it? Who's saying that DeFi is not safe? Who's saying that CeFi is not safe? Are they the same people that are 20 to 1 leverage? Why don't you go and clean up your own house first before you come and try to tell us what to do?
That's a great segment I'm going to extract from this interview. The main theme is like, yeah, regulate and hold your own industry, traditional finance, to a higher standard before coming to ours and trying to enforce laws that might not even be applicable, right? Like in their system, what is it? Only 250, up to 250,000 is only guaranteed. And then after that, it's not. But then in DeFi on chain, can actually guarantee some of these things. And I think even last time when I interviewed you, one thing we talked about was just, we did talk about inflation and yield, but you know, what I've been seeing recently is, for example, the growth of the USDC stable coins, other stable coins. So where we are right now in the industry, do you think that like what impact do you think the growth of stable coins will have? Is it more about the applications, or do you think it's going to be more about the saving products and people are going to get in that way?
Yeah, so I think we peaked at like 140 billion in stable coins. Now we're just under 100, and in total, right? In total, but the important thing is that we're almost too big to fail, right? We're almost big enough where the Fed and other institutions are going to have to treat us the same way they treat themselves, right? And if there's enough assets in DeFi or enough assets in stable coins, because we have yield and they don't have yield, right? It's still negative rates in most of Europe, right? And negative rates are probably coming to the United States soon. Because of all of that, more and more money is going to find its way to stable coins, because now stable coins are yielding. I remember when Celsius started paying rates, I think we started with 4%. And then we went all the way to 12%. We paid as high as 12%. Now it's 8.8. People thought we were crazy. People were like, you cannot pay this amount of money. What are you talking about? Now Coinbase is offering 4%. You know, Circle is offering 5%, right? Everybody's offering something because they're seeing so much leaving their coffers that they have to do something to stop this migration. Now, banks are seeing the same thing, and their first reaction is not to join the party. Their first reaction is to say, Bitcoin is bad, Bitcoin is not green, stable coins should be regulated, these guys are taking too much risk, this and that, and so on and so on. But I think sooner or later, you're going to see banks join the party, and they're all going to have to do DeFi and CeFi. And we look forward to working with all these banks. After all, there's a lot of good banks. It's not like everybody's a bad bank. So we just have to figure out, okay, who is going to join the party and who's going to stay on the other side and have a sour face and keep telling us how we ruined the Wall Street party, where you could just make money and not do anything, right? Like like JP Morgan has a franchise. They don't really have to do anything. They just make 60 billion a year, not doing anything, right? Just charging their customers fees.
Yeah, I mean, it's either join or be disintermediated for some of these banks. And you know, banks like Wells Fargo, I think they're no longer even offering loans, right? They just took that out of their business for various regulatory, legal reasons. But
well, also look, the last thing banks innovated was the ATM machine. So when you haven't done anything in 30, 40, 50 years, I think the first ATM was 1970. So when you haven't done anything in 30 years or 50 years, you know, like your customers are basically getting antsy and saying, wait a second, you know, why am I still with you? Why am I paying? Why does it take 3 days to settle my account, or to move my shares, or to do a wire transfer? It takes 3 days to settle. I mean, it's just stupid, right? We settle in less than 10 minutes on the blockchain. Globally, I can send money to anyone on the planet and settle in less than 10 minutes.
Seems like blockchain is the right technology to solve this interest problem and to solve this settlement problem for transactions. And there's it comes in many different waves, but I think everything we're talking about here today, you know, clearly savings, earning interest on your money is a big problem. And there's a battle right now, right? Custody of your funds drives the entire financial industry. But, you know, one thing I find interesting, I want to get your opinion on, is the concept of governance in DeFi, right? We see like a lot of these protocols are decentralized, but then you have governance. Whoever owns majority of the tokens can drive votes and different things like that. Do you think there's any dangers in governance if traditional players get involved, and can they control these decentralized protocols through that way?
So look, the community got the taste of freedom, right? I mean, you can't take freedom back. So they had no rights. Like what I described, where at Celsius, you can see who earned what and how much we earn and deposit. Try to do that with your bank. Go to your bank and say, here's my check for $1,000. I want to know, what are you using it for? Who are you giving it to? What are you charging? How much of that money you made, I'm getting. And I want to see all the other clients in the bank and see what they're earning, right? That's what Celsius does every day. But no bank in the world will ever let you do that. So I think there's a disconnect between what you should see and what you are allowed to see. And now that the crypto community, the DeFi community, the CeFi community has tasted that freedom, they're not going to allow banks or other institutions to come in and take it away from them. They're just going to say, okay, you are controlling this protocol, you are centralizing this protocol, we're just going to move to another one. Anyone can fork in a second any of these protocols, launch it and say, I don't offer this control. On my platform, JP Morgan cannot buy 50% of the votes, right? So I think the days where we are basically held, like the bank tells you, these are the rules, you cannot break them. You break them, I'm going to shut down your account. All those days are gone. That's, again, they can put those suits back in the closet. We're not going to need them anymore.
I think that's a fair point. Like, they cannot exhibit the same amount of control, even with capital. We can programmatically restrict them, so to speak, and they can't really buy the IP or buy the product. I mean, you still have mergers and acquisitions and different things like that, which was a little bit of my question as well. Like, what do you looking 6 months or 12 months into the future now? Do you think there'll be more mergers and acquisitions of where like a bank might try to buy a company that maybe created a DAO or a project or something like that?
Well, yeah. So look, I definitely think that banks cannot innovate quickly. Like, it's going to take them forever to understand and build something. So I think they're definitely going to be in a position where they have to acquire someone who has built the right systems and can basically scale and provide the services that the banks need. Again, I think the smaller banks are probably going to move faster and do this earlier. And the bigger banks are just going to be last to the parties, and they're going to pay much, much more because they're going to have to buy bigger entities, bigger companies that already aggregated these assets. Celsius with over 15 billion in assets, we're not a bank, but if we were a bank, we would rank in the top 100 banks in the United States if we were a bank, right? So it's not like we would be ranked as one of the largest hedge funds in the world with 15 billion in assets. So we're already at a certain, and we're not even 4 years old. I mean, we're just getting started, right? We have 1 million customers. Our goal is 100 million customers. So I think what's happening is that this migration is happening so fast, and in the beginning they ignore you, then they laugh at you, then they try to shut you down, and then they buy you. Right. So that's what the process that we're going through right now. Right now, they finished laughing at us and they're trying to shut us down. Right. That's what they're trying to do. They're talking to regulators. They're going to the courts. They're trying to create new laws to basically put the speed bumps in front of us. But the fundamental truth is that banks never appreciated their relationship with their customers, right? What does JP Morgan do better than anyone on the planet? They extract fees from the customers and they deliver them to their shareholders. Jamie Dimon gets paid hundreds of millions of dollars because he's exceptional at delivering that profit every quarter, like a clockwork, right? He delivers profit to the shareholders, a dividend every quarter, right? The new earnings, higher earnings, which is great for the shareholders, but it's not so great for the customers. So what this new decentralized version is all about is delivering all the value to the customers. And the pendulum is swinging from that max centralization, which is what JP Morgan represents. Too big to fail, largest bank in the world, super centralized, right? Trying to create their own blockchain. Only my friends are invited to use it. It's not an open standard. It's not open to counterparties, only to friends of the bank. And we're swinging from that to all fully decentralized. DeFi is on the other extreme, fully decentralized, right? So if you want to bridge those two worlds, you do need to have one leg in traditional finance and one leg in DeFi, right? You cannot just be pure DeFi, because you have to bring all those trillions of dollars over the bridge. Somebody has to build a bridge and bring all that money over, right? If we can't bring that money over, then we will never scale in the decentralized world.
That's a great way to put it. Yeah, the money transfer from traditional finance needs to occur as well. Otherwise, it's just going to get locked up there, and really the people that control the money, the power will stay with the same people. So I think it's excellent what you're doing. You're kind of giving them so many good incentives that it's hard for them to even say no. Like they might end up even borrowing from you guys, right, on the institutional side. What's the future of Celsius Network just in general? Would you ever turn it into kind of a DAO model, more input from like consumers who are holding the token? Do you have any plans for using the token for governance and different things like that, or do you just think that that doesn't work even in DeFi, right? Sometimes even the voting is centralized itself.
Right. Yeah, definitely. We've seen several examples where the community decided to do something and then they found a way not to implement it. At Celsius, look, you can go to our Twitter feed and you will see every day we ask the community, okay, do you want us to add Dogecoin? 80% of the people voted against adding Dogecoin to Celsius, right? And we had thousands of votes. I'm not talking about, it's not like 10 people responded, right? So there are a variety of ways to do governance, and the pure model where everybody with a token gets a vote, but the problem is that the founders or the VCs have a majority anyway. So who really decides on what to do? Is it the majority vote, or it's the people with the most tokens? So at Celsius, we like one person, one vote. We like to hear on Twitter, you can actually do that, or on Reddit, you can do that very easily. There's very difficult to kind of lie or cheat around the system. It's public domain. Everybody gets to see who said what. So we like that much better. And we still, look, we have 8 different utilities for the CEL token. So it's not like the CEL token is only used for governance. I think a lot of these projects have a token and they pretend that it's for governance, but it's really not used for governance. And that's their legal argument for why they have a token in the first place. At Celsius, the token allows you to earn more yield, and it gives you a discount on your loans. So it has very clear utility. Yes, it has some governance utility, but that's not the main purpose of the token. And I think, again, we've delivered on the promise of what the token does. So I'm not sure that adding this governance point, I mean, show us customers who continuously are frustrated or complain about Celsius. We have hundreds of positive reviews, thousands of positive reviews of people saying thank you, right, for helping us out, for leading us to financial freedom, for showing us that our money can also work for us. It's not just we have to work for the money can work for us, right? And bringing back yield, something that a whole generation didn't even know was possible, right? So all those things are what I measure success at. And people say, well, governance, look at it, but what does it really mean, right? What does it do? So I think our model is probably a better model than some of these guys who are fully decentralized.
That's great. It sounds like you already kind of did your governance to even enable governance. And if you don't need that, I don't think every protocol needs that. Sometimes it's even bad. And I think, yeah, it's always good to get the collective energy of the crypto community and see what there's demand for. So as we kind of end things off here, I know recently you were involved in our Coins podcast production. If you want to give a brief synopsis of just how was your experience with that?
Well, it was a great interaction. I think, again, you guys always organize an amazing events, amazing speakers. I always learn new things. So it's definitely, very exciting to participate and share ideas and so on. I do want to add one more thing to the previous thing we talked about, because Celsius also retained control, meaning the founding team still retains control in Celsius. And what happens to a lot of projects, especially when they raise several rounds of funding, is that the VCs or the investors retain control, and then they dictate what has to happen. They want to maximize shareholder value, not necessarily maximize the community and its interaction. You can see that if you read our white paper from 2017 and you look at what we're doing right now, you will see it's 100% what we promised. We have not changed a single part of what we either promised we're going to do, or how the service is going to work, or who's going to get most of the benefit. So I think it's a very important piece, because unfortunately I'm seeing more and more of these projects. Doesn't matter if they're centralized or decentralized, they have a governance or no, they're a DAO or not a DAO. You're seeing them kind of copying the Wall Street theme of creating the most value, then dumping on the community, and then moving on and doing something else, right? And really, the community is the one that's getting hurt. The community has to find a new home. And that's why we committed to really to the long term, and to unbanking the banked and bank the unbanked. That's really the mission of Celsius.
Yeah, 100%. And, I think you're one of the great representations of just what crypto and blockchain is about, because of the ethos that you and your company hold so truly. And every time we talk, you always bring up, your pillars, your ethos. So I think to end things off, maybe just tell us like your top one or two ethos that you keep very true to you, whether it's you or within Celsius, anything that we can look forward to, and how can people connect with you and Celsius?
Sure. So I have a bunch of them. So let's see if you're probably going to cut me off. One is to be true to yourself. Again, you need someone to love, something to do, and something to look forward to. Do good, then do well, in that order. Again, unbank yourself, bank the unbank, unbank the banked, right? Like we talked about before. Always try to do, find something to do where your talents can exceed your ambitions, right? So it's about finding what is your really inner talent, and then allowing your ambition to fill up your dreams.
Yeah, I love that. I think it's a great way to end things off. And yeah, how can people get in touch with you or learn more about Celsius, if you want to give any last shout out?
Sure, yeah. So I'm on Twitter at Mashinsky, my last name, Mashinsky. I do a weekly show on YouTube. So come to Celsius Network on YouTube and watch our episodes. I mean, we have thousands of videos there with content, educational stuff. The website is celsius.network. And if you want to try the app, it's available on Apple and the Play Store and Android. Just search for Celsius Network, give it a try. We don't charge any fees. We'll even pay you to take your money out. So you'll have 0 fees to try the service. We create yield, you get most of it. That's all we do. And we do it better than anybody else.
Well, folks, you heard it here directly from Alex. Thank you all for your great perspectives and telling us, all your great updates you're coming out with. I had a great time speaking with you as always, Alex, and yeah, I wish you the best of luck for the rest of the year.
Thanks for having me, and again, I want to thank you for the time and effort you and your team are putting to educate the community and bring new people into crypto. Doing God's work here.
Thank you very much. We appreciate that. And we couldn't do it without all of our great guests here. So thank you, Alex. And I'll let you all tune back in to Reimagine 2021 version 10. We're bringing you many more interviews with founders, latest news. So stay tuned and check out our YouTube library. We have over 500 interviews right now. And I hope you all have a great time in crypto and continue building. Thank you.